Hi, I'm delighted to be here today with Dee from P10 Financial, just to get an overview of the mortgage markets and what you can expect if you're looking to purchase or refinance any property interests throughout the course of 2024. So Dee, it's lovely to see you again.
Nice to see you again as well. It's been too long.
It has, but it's great to see that you guys are saying that the market's busy for you guys and active.
Definitely. We definitely see more confidence in the market. I think we get the back end of it. So we've had a lot of clients come in wanting to know affordability, what they can borrow, especially now that rates are slightly lower than they were 4 months ago. It's re-establishing people's affordability. So
100%.
People were hesitant before to act, because they just couldn't stretch themselves as much as they wanted to. But now rates have come down, it's made things a little bit more affordable.
Yeah, I mean, we're certainly seeing that from the resi sales side, a lot of activity, and actually activity where people are wanting to commit and get on with that. A lot of the commentary has been that rates have been moving in the right direction to a degree. What could somebody expect? 5-year fixed money, broad brushstroke, what are we talking the range of?
So rates at the moment, lowest rates are just sub 4% currently. So you can get a deal from about 3.89% depending on your circumstance for a remortgage deal. Resi rates are still in the early 4% brackets. It's obviously circumstances dependent, but we're finding the gap between 2 and 5 years is closing.
Okay.
So for a long time, a 5-year fix was a lot more competitive than a 2-year. At the moment, the difference between the two is negligible.
And is that because lenders are, well, what's the reason behind lenders closing that gap?
It's driven by swap rates. So historically, 5-year swap rate money was considerably cheaper than 2-year or 1-year swap rate money. The margins between the two have actually closed. However, yesterday, Here Live, Santander have actually increased their rates slightly, and that is off.
We wanted good news today, not rates going up.
It's ever so slightly. It is again off the back of interest rates being increased, swap rates being increased, and service levels, which is great for the property market. It means that there's a lot more activity. Banks are competing to be the number one lender, and that's driving rates down along with swap rates. The Bank of England rate hasn't changed. So despite that, rates have continued to fall. Come February, the big question is, are we expecting another...
And that was the question. You're the one to answer.
It's hard. So with inflation increasing ever so slightly, I would be reluctant to say that the Bank of England would be hesitant to decrease rates. My guess with my crystal ball is they would hold, and maybe the following quarter rates would decrease if inflation does decrease.
But again, probably over the course of 2024, and I think it's a question a lot of our buyers and clients would be keen to hear from you, is actually, are you looking at significant rate reductions over the course of the year, or do you think we're in a sort of a more normal period of the cycle where it's going to be smaller percentage changes?
I actually hope that a smaller percentage changes, and the reason I hope for that is that there isn't this yo-yo of a market where if we drastically decrease rates, that then causes inflation to go up again and we'll have to increase them. So again, my guess would be we'd probably see about a 40% decrease over 2024 if we don't hit any other meteor.
Well, I mean, speaking of bumps in the road, obviously an election year, does that, certainly from the property side of the market, you do see that the run-up to the election tends to be a normal market. 2 months before, people start sitting on their hands and wanting to see what the lie of the land is. And then it's probably another month or so after the election for people to get back into gear and think, well, it's another government. Does it necessarily matter which one? Do you see that in terms of decisions on mortgage finance and impacting products? Or?
Absolutely. I think in the background, it has such an effect on the socio-economy that it drives swap rates one way or the other. And then that has a direct knock-on effect on lender rates. So without a doubt, we will see that turbulence affect what rates will be from the election. So it will be interesting to see how that pans out. In the short term, however, I would urge clients generally, if they are looking to get a mortgage, given the uncertainty, that you can always go and apply
and lock in a product.
And lock in a rate now. And you can always change it between now and completion. And as we've seen at the moment, timescales between offer and completion have extended somewhat.
But that's not down to you and the finance side on it. It tends to be other parts of the element.
Exactly.
Good.
So there are always options to then go and secure another rate. But I think the election will have a big impact.
But in general, you're expecting, probably starting to see the early signs of it being more of a normal pre-COVID mortgage market where we're
100%.
not seeing those yo-yos.
I think that realistically, the 5-year forecast is the new norm is probably going to be about 3.5%.
Yeah.
And we're not far off from that. And regardless of what happens in the Bank of England rate, I don't think that will have a direct effect on mortgage rates. Yeah. It will just give some certainty to the economy. Mortgage rates are very much driven by swap rates, and swap rates are impacted by the general election, what's happening in the market, what's happening in the US, what's happening with war and oil prices. And that's where we're seeing such a small fluctuation in rates between lenders, depending on when they secure their funding.
Which is superb. And thank you for that. It's brilliant intel. I think we very valuable for clients of ours who don't know of you guys. And, it was lovely to hear that you were with an old client of ours from quite some time ago. And it's not just that one-off transactional relationship. You guys, you're looking after people from first purchase through on.
Definitely. And also I think the advantage of using a broker is we advise you on how to arrange and structure the finance.
Yes.
So a lot of people are saying at the moment, well, rates are high, it's not affordable. But there are a lot of things to make the mortgage affordable. So you can lengthen the mortgage term. A lot of lenders are offering terms of 40 years now. Okay. You can also, a lot of lenders are much more comfortable with having interest-only mortgages. Yeah. So you can get pure interest only up to 75% loan to value, which drastically decreases your monthly payments. And depending on everyone's circumstances, we'll advise them accordingly. Yeah.
No, huge. And, I think the key for me with you guys and where you've always added value at P10 Financial is looking at the clients who aren't just looking for a high street product. They have investments all over the UK, sometimes all over the world, and looking at different structures, how they can not only facilitate the purchase, but actually make it the most financially viable and probably flexible future for them. And
100%.
that for me has always been what you've been excellent at, driving that for clients and looking at them as an individual and sourcing the correct products for them.
Absolutely. As you've just said, there are so many things that we can do. We can keep your money invested and in effect lend your own money back to you at a marginal cost called Lombard lending. There are other options where you can put your money into a linked savings account and offset it. So then you can be paying zero as a monthly payment but still have a loan facility of £1 million. Yeah. So there's so many things that we can do, and we look at everything just to ensure that it's not just pure house purchase or remortgage, to make sure that the client's in the best position.
And I think that's become more and more prevalent. Certainly, in the markets we're operating, people are probably more financially aware and open to proper advice and guidance as to how to make it the best possible solution for the long term.
Definitely, and as I've mentioned right at the beginning, with rates fluctuating so much, I think a broker and ourselves will have much more influence over making sure that we're securing the best rate for you all the time.
In the right time, yeah.
In the right time. We've seen clients recently where we have remortgaged deals probably about 3 times between offer and completion, which means 3 whole new mortgage applications for us, but it's the right thing to do for the client. Yeah. And we've saved them sometimes up to 1% recently.
Yeah, that's a big difference. No, so look, it's brilliant to get your insights and lovely to see you again. And it's lovely talking about a few old clients and some live ones. Yeah. And it's really comforting to hear what you guys are seeing and predicting for the market. And certainly, hopefully we'll get you back to give us an update maybe after the election and see what the lie of the land is then.
I'll be saying whatever I said in January.
It still goes, I'm sure. No, but thanks so much.
Thanks, Charlie.
Lovely
Thanks
to
for
see
having
you.
me. You too.